It's Tuesday, July 15th, and I'm David Song, currency analyst with Daily FX, here for a quick overview of the Dow Jones FXCM US Dollar Index, and along with some of the recent commentary that we heard from Fed Chair Janet Yellen as she's still delivering the Humphrey Hawkins testimony. But in terms of her prepared remarks, what can I say? More of the same here. She continued to highlight the ongoing weakness in the labor market, the continued slack that she sees, at the same time subdued wages, and of course the ongoing weakness in the U.S. housing market. So along with those commentary, dollar was struggling initially when we saw the comments, but a little bit of a bid here in the dollar. I'm not going to take too much of it, as we did see some little bit of weakness in some of the data prints earlier this morning, largely the retail sales data. Even though we saw another increase in household spending, certainly fell short of market expectations. So with that, I still don't think we've seen the data prints to spur a material shift in the Fed's policy outlook. So with that in mind, and as we continue to get this dovish tone from the Federal Reserve, I'll continue to favor the downside for the dollar from here. But a quick look at what's happening in terms of the dollar index. And again, we are trying to, it looks as though maybe in for a larger correction as you're trying to break out of this initial bearish formation. And again, out of this region here, or this trendline resistance, if you will. But nevertheless, I'll still watch 10,440 here, and we'll see what's going to happen as we still are going on with the Q&A session with U.S. lawmakers there. But in essence, I'm not really looking for much. So all that to say, I think we might see things reverse course over the next 24 hours, as now we're going to turn our attentions to some of the big events over the next 24 hours, such as New Zealand's second quarter CPI print, where we're looking for the headline reading for inflation to quicken to the fastest pace since fourth quarter of 2011. And of course, we're going to be watching that ahead of the RBNZ's interest rate decision that's due up next week. And looking at Credit Suisse overnight index swaps, markets are pricing a 91% chance that we will see a rate hike next week. At the same time, China's second quarter GDP is going to be a big one to watch overnight, as we're looking for a further pickup in the second quarter. So we'll be watching all those. But right now, you're a little bit heavy here, but just largely sitting at support zone, 35.80, 35.70 zone, so we'll be watching for that. But the pound certainly did make its way higher, fresh monthly highs after we got that nice CPI print, and of course with some of the dovish rhetoric that we saw coming out of the Fed testimony. But right now we're still watching and eyeing that 172 handle. Personally, on my end, I have a bigger level to watch all the way up here right around 72.20, 72.30 zone, and we'll see if some of these topside levels could get triggered tomorrow, as we'll be watching the UK's job report, as well as we're looking for another 27k decline in UK jobless claims. So we'll see if that will add to the argument for the BOE to come out with a little bit more of a hawkish tone. And going into the BOE minutes next week, same day as the RBNZ, the big theme to watch is going to be, are we finally going to see a descent at or within the Monetary Policy Committee? So even the pound looks very nice. And one thing I'm really starting to look at right now is, have we carved the higher low, the low for the month of July? And can we look for some fresh highs going forward? And in fact, looking at some of the data prints that we saw, that very strong CPI print, one thing I think this is going to be a key theme to watch, where the Bank of England might continue want a further appreciation in the sterling, as they want to deliver price stability in the UK. So some themes to watch, but again, I think topside remains favorable for the pound from here. And also with the Aussie, we're getting a little bit of a minor pullback, a soft support here, 93.50 zone. And again, it's largely the COMLOG that's a little bit weak right now. But with the Aussie, of course, with China data up later on tonight, we'll be keeping a very close eye on this one. Key support zone still remains 93.30, 93.40 zone, so we'll watch that, but could see a little bit of pickup here, especially if we do see some good growth numbers out of China. And even for the Kiwi, it's sitting at soft support here, right around that 87.50 zone. But with the Kiwi, again, this one could be the biggest mover overnight, as we were watching the headline inflation for New Zealand. And again, we're looking for a big uptick in that to an annualized 1.8%. But even with China data, might spur a nice bullish reaction for the Kiwi, as again, their trade sector coming in better than what most have expected. And again, I think the RBNZ could follow along with the BOE, where they're looking at this theme of stronger exchange rate to really hedge against imported inflation. So we'll be looking for that all going into the RBNZ's interest rate decision. And again, we're looking for another rate cut. And of course, it looks like we'll continue to get a hawkish tone from Governor Wheeler, as he's really big on central bank credibility as they look to normalize monetary policy further going forward. And of course, Bank of Canada is going to be a big one to watch this week. But in terms of what's happening here in light of the commodity block weakness, I'm still going to call this a correction. I'm still watching this downward trending channel, and we'll see how large it could get. But for now, the key level that I'm watching watching right now, former support zone, 108.20 into the 108.30 zone. So we'll see if we could manage a move into there, maybe a little bit of a bigger correction. But one thing to watch as the Fed continues on with their reluctance to normalize monetary policy, if we get a little bit more of a material shift with the BOE statement, largely we're going to see what their take on those inflation numbers are, and they came in stronger than expected. Are we going to see the BOC really kill speculation for a further reduction in the benchmark interest rate, take more of a neutral tone? And if that largely pans out, I'm going to have to favor the downside on this one, as we're seeing a growing descent or deviation in the policy outlook between the Fed and the BOC. But all that to say, I still think we're going to have some key event risks that could spur a little bit more volatility, even from what we've seen thus far. So keep a close eye on some of the recent themes, and remember the trading environment that we're in. We're still, I believe, in this yield-seeking environment, and with the dovish commentary from the Fed, I think it will continue. So watch those commodity blocks overnight, largely the Aussie and the Kiwi, as you go through, again, New Zealand CPI, China GDP, and we'll see how market sentiment will fare. Because for the most part, I think this dovish tone should continue to be supportive of this yield-seeking environment. But with that, we'll certainly address all this tomorrow as well. And I just want to wish the best of luck on all your trades, and we'll speak again tomorrow.